proceed, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video to mean that you could find it on our YouTube channel at HFM Kenya. Kindly like, subscribe, and click on the notification button so that in future you are not left behind from content that we post from time to time. Now, good morning, Jeff. Good morning, Augustine, and good morning, everybody. So, again, we'll start with our normal procedure. And if you are watching this from YouTube, kindly just click the subscription, like, and share to allow us improve on our algorithms. And as our commitment to you, we will keep on improving our content from time to time to allow you get much more familiar with the financial market. Now, with that out of the way, we begin by fundamental analysis. And we have said this, that in fundamental analysis we look at the forces which drives the market. Which forces are these? These are economic forces or stroke geopolitical forces. Economic forces would tell us the economic health of a country, and then we would translate that to different asset classes, currencies, stocks, individual stocks, indices, commodities, and so on and so forth. So in the economic world, on today is on Friday, the 24th of January. The 24th of January. Very nice. So we have had quite a number of market shakeups, which is we are going to discuss in a few. So let's proceed. Number one, we have had the Bank of Japan cutting its interest rates. We see an interest rate cut in by the Bank of Japan. Now, to bring it all the way from the top, interest rates is a tool used by governments through the central bank to monitor inflation and also ensure favorable employment. So we would essentially say interest rate is used to control the economic health and well-being of a country. Okay. Now, if the economy is doing fairly well, they are convinced it's doing well, they would want to adjust this interest rate to fit that particular standards. So we see the Bank of Japan right here cutting interest rate, hiking interest rate 0.5%. We see a hike or an increase in interest rates, with the anticipated or consensus being at 0.5 and the previous being at 0.25. So we see an hike of interest rate by 0.25%. Now, someone would care to ask, what implication would this have? So the Bank of Japan raises the interest rate to 0.5% from 0.25, matching market expectations. Remember, we see the expectation here being 0.5 right here. This is what I'm talking about, guys. Somebody would ask, where would I find this information? Visit the HFM Kenya YouTube, the HFM website, hfm.com. Go to tools right here, then go to economic calendar, and it's going to appear. All this under one roof, making your financial journey quite accommodative and smooth in the long run. So the Bank of Japan rate hike pushes the yen higher. The Japanese stock market creates positively. Meanwhile, the US stocks, we shall see that they have mixed reactions, while the global commodities we see muted reactions. Now, the economic analysis of this would be that the Bank of Japan decision to hike the interest rate by 0.5% would signal the confidence of the Japanese in the recovery of their economy, of course, in the context of the global economy. The question of how this is going to move the market, we shall demonstrate that on the charts. Now, it is important to note that on the market sentiment, the risk on in Japan, but global markets are cautious. We still have some sense of being conservative because we know other banks will also adjust their interest rates in an effort to be much more competitive in the global standards. And the important tip is to wait for price to get to major key levels. Then we see the reaction of candlesticks in this particular price, and then from there we could be confident in market direction. On the flip side, and today I'm going to highlight this to make it even much more understandable, we see Donald Trump putting pressure on the Central Bank of the United States, or the Federal Open Market Committee, some of us would like to call it the Feds, to lower interest rates. So Trump is just got into office less than a week ago. Among the promises was to cool down inflation. Now he's pushing the central bank to cut interest rate for him to be able to achieve this promise. Will the central bank comply to this? Constitutionally, we know that by United States statutes that the Federal Open Market Committee, or the Feds, the Central Bank of the United States, is not directly being controlled by politicians. Yes, the chairman of the board is an appointee of the politician, but it is of the president, but it is free from political manipulation. Now, a good analysis would be, of course, Donald Trump knows the rates were going to be cut to a certain extent because inflation was cooling but not yet perfect before he got to office. So he's simply saying he's pushing them to cut, because I mean that would be the automatic function of the central bank in that regard. So simply echoing what he can foresee, what his economic pundits can foresee. So not so much of political intervention there. So good morning, Jairus, welcome. Today we are quite a number. We'll keep increasing the numbers like we did in the Q4 of last year. So this move by Donald Trump to have the Feds, or Central Bank of the United States, cut rates, the market will react to this, of course, with the US stock showing mixed movement. We see in stocks, we are going to see some stocks being bullish, some being bearish. We are going to see indices, S&P 500, like we talked yesterday, touched its all-time high again. And we're going to be looking at all these dynamics. With Trump pushing for the rates, the expectations are growing for a shift in the Fed's policy. A move like this would impact inflation and the borrowing costs and the global trade. And to understand this better, we will see the United States dollar giving us a slight recovery, because some hours before Donald Trump's inauguration, we observed the dollar index losing its value. This is because of the uncertainties of some of the statutes he wanted to highlight. So let's see which statutes are those. Very nice. So, number one, economic policies and trade agreements. Now, before I start reading them one by one, then giving us a slight a snippet into them, it is important to note that we see Donald Trump coming into office, and without seeming to sound opinionated, we see the signing of over 100 executive orders. Some reliable communication sources would say up to 200 executive orders, and a revocation of the past Biden's administration 78 orders. So we see Donald Trump aligning the government in accordance to his leadership styles. And in the past, we have spoken about the wages and taxes and regulations, as our key focus to understand the effect of this in the financial markets. Today we look at these 8 now to broaden it a little bit and to see how it's going to be affecting the market. Number one, economic policies and trade agreements. We see Trump's often focus on American first. So the Trump's mantra has always been, let's make America great. So he's putting the interests of the United States first. For those who might not understand, the United States, being the most powerful country in the world, is said in international relations to be policing the world, to be the leader of the free world. But we see Donald Trump coming in and saying, yeah, we would still want to hold that position, but only if our interests are withheld. We see him withdrawing from certain trade agreements. We see him shifting political, economic policies. And a good example would be the NAFTA. Um, 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 we see in the aspect of the NAFTA, we see a little bit of adjustment of tariff tax cuts and renegotiation for trade deals. We see him withdrawing from pacts like the Italy Accord. We are going to be looking at the when we get to environmental policies. Conservatively, he announces favorable trade agreements or tax cuts that stimulate growth, global stock markets, and might respond positively. So, in a nutshell, in economic policies and trade agreements, and a good example of this would be the NAFTA and the USMCA policies, we see him encouraging companies to form from the United States. If you are not a citizen of the United States and you want to tap into the economy of the United States, is giving a one-way entry. Come to the United States, form your company here. Now, that is going to boost the economy of the United States, because when people invest in your country, jobs are created, the economic situation is boosted, and the likes. Number two, what we have just discussed, monetary policy and Federal Reserve. Now, we know that the chairman of the Federal Open Market Committee is a nominee of the president. Okay, although the Federal Open Market Committee or the Central Bank of the United States would be said to be independent to a certain extent. Okay, at least that was the Constitution says. And so on monetary policy and Federal Reserve, Trump has criticized the Federal Reserve in the past for its interest rate decisions, calling for lower rates to boost the economy. And if he suggests future interference of challenges the Fed's decision, this could create uncertainty in financial markets, particularly for currencies and bond markets. The interference of Trump into the affairs of the Federal Reserve and monetary policy, because the Federal Reserve is in charge of the monetary policy, would affect currencies and the bond markets. And in geopolitical tension, Trump has a history of making bold statements about foreign policy, especially concerning China, Russia, and Iran. Any speeches where he discusses escalating tension or military action in these areas would cause market volatility. And when it comes to geopolitical tension, we shift our focus to commodities, right? Which commodity? In commodities, items that have tangible value. We look at metals, precious metals, gold. We see energies like oil and the likes. On tax and regulation reforms, number 4 here. On tax and regulation reforms, if Trump outlines plans for new tax cuts, e.g. corporate tax reductions or deregulation aimed to boosting business activity, this would drive the stock market to rally. All right? Conservatively, proposal to reintroduce stricter regulation could lead to negative market sentiments, particularly in sectors like energy, finance, and tech. That would affect stocks and group of stocks. Fiscal stimulus and infrastructure. Trump has occasionally proposed large infrastructure spending packages, which could drive demand for construction material and related industries. We are familiar with the famous phrase, drill baby drill, where we see Trump wanting to drill oil in the United States, and he argues that the United States has oil that has is an oil-rich country far beyond the OPEC countries. He argues that the US has enough oil to sustain itself. On immigration and workforce issues, Trump stands on immigration, particularly regarding stricter policies or broader control measures, can impact labor markets and certain industry like agriculture and tech. Speech proposals that hint at labor shortage or disruption might negatively affect the supply chain. So, on immigration and workforce issues, people go to the United States to look for greener pastures, what we have come across most recently called the land of opportunities, right? So a lot of immigrants in the United States that Trump looks forward to take them back in their countries, okay? And when this happens, it's going to affect the workforce in that part of the world. But on the flip side, we also see him encouraging professionals to go work in the United States with a focus on India because of the engineers and tech and among other professions that he seems suits. All this is going to be affecting the market. Remember, immigration and workforce issues can be categorized to be under labor data, and we know that labor data is very key in influencing market forces because of taxations from the government which allow economic boost. Global economic outlook on Trump. Trump often discusses the strength of the United States economy and global economic trend. A positive outlook on the U.S. economy, particularly regarding the GDP growth and low unemployment, can shift investor sentiments worldwide. So we see this is quite important. His policies are meant to safeguard the interests of the United States, yes, but by extension affect the rest of the world. That is why he is a key interest party. On environment policies, Trump's positions on climatic change and environmental regulations, e.g. pulling out of the Paris Agreement, may influence renewable energy and traditional energy markets. We see here Trump is really against, he has said it in the public, against generating energy through the wind, okay? He wants to generate energy from natural resources. This is going to affect, of course, the global environment, but like we said, he aims at putting the United States interests first. A speech that signals support for fossils and fuel industries. Now here also escalate the points of drilling oil. All this is going to affect the market sentiment. So I would go to the charts to see the key areas of interest in regards to that statement, and we begin with gold. So gold is approaching the all-time high again at 27.73. Would want to see price close above. The reason we're observing gold being in a bullish trajectory is because of the tension that is coming in trade, in the trade warfare between Trump, China, Russia, and Iran, like we have looked before. All this is causing tension and uncertainties which would increase the demand of gold because gold is a safe haven. Here we see central banks, major investors, hedge funds going for a safer haven and money shifting from stocks, particularly in some parts of the world, not really affecting the US stocks. So on oil, we were in a bullish rally on oil, but we are experiencing bearish recollection. This is because if Trump succeeds to drill oil in the United States, of course, is going to shift the focus from OPEC to the US as a major oil producing country. Now, this is going to, of course, affect the price of oil, and the demand is going to go a little bit lower than it has been. And of course, the price is going to go down. So if he succeeds, we'll anticipate to see the price of oil even continuing to be in a dovish fashion. On stocks, this is S&P 500. We see that we have broken the all-time high at 6109.52. Now it would be a really good time to wait for retracement so that to continue riding the bullish trend. This is S&P 500. Why do we see this? The encouragement of Trump for people to and investors to come and work and create companies in the United States is giving investors optimism that companies and group of stocks like indices, they are going to do better because of the influx of resources in that regard. We see the United Arab countries coming in to invest in tech for up to 600 billion US dollars. We see AI companies with AI moguls from Japan going to US to invest up to $500 billion. So all this is going to affect the stocks. A scenario that we are going to see even clearly on US 100. These are tech companies in the United States would want to see it break out the highs to keep rallying on the upside. This is because as a reflection of Trump's policies, which is making heads of captains of industries and leaders to shift their focus, not only countries, heads of industry, but also heads of state, to align with him so as to be in his good books without speculating much. So guys, we could find all this amongst others in opportunities in the financial markets. For us to do this, for you to be able to access all this, kindly register with HFM and visit our HFM website at hfm.com. Attempt to register an account here, and you'll have our experts get in touch. Also get to your mentors who work together with us. You know them, the ones who have allowed you to access this chat room. They will guide you on the process, and then from there you are going to be much more interactive with the financial markets. As a disclaimer, this is by any chance not financial advice. It's purely meant to bridge the educational gap. Remember to observe risk management so as to have a long game in the financial markets. Until tomorrow, the same place, the same time. Until Monday, the same place, the same time. See you guys, and God bless.